Welcome to Risky Business, Transit Insurance and Risk Management webinar, co-hosted by National RTAP and AASHTO MTAP. National RTAP Executive Director, Robin Phillips, will kick this webinar off.
Hello, everybody. Thanks for joining us and coming in and giving us a chance to share some great information about how to basically get more butts in seats and help you manage the risk that all of us take in providing this great and important service. Next slide. Are you doing this? Oh, there we go. So Kara is going to give us the rundown on how to go through our program. And I am just here to share some of the information later in the program about what's going on at National RTAP.
Thank you, Robin. And here are some webinar participation guidelines. This is going to be an hour-and-a-half webinar recorded, and you can ask questions or share comments at any time through the chat button in the webinar. During the presentation portion, all participants should stay muted, and during the question and answer portion, we'll go through the written questions first, but then you can raise your hand and we'll be called upon to unmute yourself and ask a question or share a comment. The slides and a recording of the presentation will be posted to our webinars page after the webinar has been completed. We promise they'll be up within a week. You will also receive a brief survey tomorrow to give us user feedback on today's session and to help us improve future webinars. So thank you in advance for filling that out. Now, you probably all use Zoom. It's something we're usually on every day, but if you're unfamiliar with it, you should stay muted, but when you have a question, you can unmute yourself. You can have your video on or off. You can use the chat, and you can raise your hand when it's the Q&A and the reaction portion. If you have technical difficulties, chat with us and we'll do our best to help you. Now, Robin said a little bit about National RTAP, but if you're unfamiliar with us, we're a National Rural Transit Assistance Program. We're a technical assistance center funded by Federal Transit Administration, FTA, through the Section 5311 Rural Formula Program. What we do is provide free training materials and technical assistance, like this webinar and many other things, to rural and tribal transit providers and to state RTAPs. We're governed by a review board, 14 state DOT and rural and tribal transit agency managers from across the country. By the way, if you want to become involved with us, we are currently soliciting nominations for new review board members. So visit our news page for details, and you're welcome to nominate yourself or someone else. Brenda, one of our panelists today, serves on our review board, and you'll see all the kinds of things that we do here. Learn more about us at nationalrtap.org. Now, one of our technical assistance products is TACL, the Transportation Technical Assistance Coordination Library. It's a joint project of FTA, us, and all of FTA's other technical assistance centers. Like its name, TACL has everything you'll need to know about transportation coordination. So if you haven't checked that out yet, please take a look at transportation-tackle.org. You'll hear from all of our speakers today. And Robin is our executive director, I'm our resource center manager, and everybody else will be introduced in kind, but we have a really, really great panel today. And you're going to learn everything you need to know about transit insurance and risk management. Speaking of those topics, one thing we've done over the past years is update a whole batch of our related technical briefs. So the first one I'm going to talk about, and Brenda will talk more about this because she was the review board member who helped us update it, is one about risk management for rural transit systems. I'm not going to read this because Brenda will be talking about it during her part of the presentation. But if you're looking for more detailed information about risk management, go to this. And we also have an entire training module about risk management. We also updated a tech brief about insurance and risk management solutions, risk retention pools. During Glenn's portion, you'll hear more about risk retention pools, including his own. So we updated it with information about Michigan, which you'll hear more about, California and Ohio, funding, etc. All of the URLs for all of these technical briefs are at the bottom of these slides. And as I said, the slides will be posted on our website. Related to risk management is emergencies. So our emergency response procedures, we have checklists during and after business hours. So they talk about what to do in an emergency crisis situation, working with an emergency response coordinator. We've updated assignments, infrastructure, and how to work with emergencies for telecommuting staff. Now, of course, with all this risk, that involves healthcare and that involves HIPAA, the Health Insurance Portability and Accountability Rule for privacy and confidentiality. So we updated that tech brief as well, including what to do about HIPAA during federally declared emergencies. We've also updated our incident and injury report form. So if a transit agency has staff or passengers who have had incidents or injuries, this is a very handy checklist to have on hand in the office, in the bus, etc. Now that's all I have, and I'm going to turn it over to Richard Price, Associate Program Manager for Transit Policy and Technical Assistance for the AASHTO MTAP.
Thank you, Kara. I want to thank Robin, and I want to thank this panel. I'm very honored to be a part of it, and very happy we can talk about risky business. Initially, I thought this was going to be a Tom Cruise sequel, but I'm glad it's not. Very happy to be here. Like Kara said, I'm actually the staff liaison for AASHTO's Council on Public Transportation and the Multi-State Transit Technical Assistance Program. Next slide, please. Now, what is the Council on Public Transportation? Well, simply speaking, we oversee the public transportation portfolio for AASHTO. Our chair right now is Roger Millar. He's Secretary of Washington State DOT, and our vice chair is Ron Epstein. He's the CFO for New York State DOT. And the best thing about having a chair as powerful as Roger is that he, as chair, he gets a seat on the AASHTO Strategic Management Committee, which is like one of the highest level of management for AASHTO and part of its board of directors. Thus, public transportation is at the highest level of AASHTO's management. So we're very happy about that. As you can see, we have a whole list of things that we do. I'm not going to read them, but I'll just sort of highlight things. What does the Public Transportation Council do? We comment on federal policy related to public transportation. Hey, kind of a no-brainer. We serve as policy experts for Congress, the administration, specifically with FTA, as it relates to state public transportation programs. We're frequently called as witnesses to go testify before Congress, as well as serve as expert advice on public transportation legislation, including the recently adopted IIJA. Again, all focused on state public transportation programs. And then the council, and I'm going to give my shameless plug, publishes annually. If you're a kind of a funding geek like me and you want to follow the money and figure out, well, how much money we're getting, how much states are spending, how much the federal government's giving, we publish annually the Survey of State Funding in Public Transportation. That'll be due out in May. It'll actually even have a new section dedicated to sort of the impact that COVID and CARES Act has had on state transit programs. Next slide, please. And then you have to ask, well, then what is MTAP? Well, that's a great acronym for a very long name. The Multi-State Transit Technical Assistance Program. Everybody has to have their own technical services program. We're one of 19 for AASHTO. So go figure. We are led by also Washington State. Don Chartok is our chair. Virginia Department of Rail and Public Transportation, Jennifer DeBrule is our vice chair. Frankly, this is a group where the rubber meets kind of the road. And when I say rubber meets the road, I actually mean transit vehicle right of way. Because why? That's what we do. We are the geeks of transit. We like to dig into the details about state transit programs. We are a public transportation community of state public transportation professionals. We provide technical assistance for other states through our best practices, along with the Council on Public Transportation. We co-host 3 in-person meetings, online educational forums and exchanges. We publish a bi-weekly newsletter, and we do all the communications to ensure best practices are out there. We serve as policy experts and program experts with FTA and our partners like National RTAP or CTAA or APTA. And last but not least, I don't want to forget about, we help put transit on the map with NCHRP. We fight for transit funding for transit research funding and for transit research projects. And that's pretty much it. And you can see from the slide what else we do. And now I get the pleasure of turning it over to a good friend and former member, Mike Spadafore, with the Jayhawk Area Area Agency on Aging. Thank you.
Thank you, Richard. And yes, I can attest there's no bigger geek in Washington than Richard Price. So thanks for the very lovely introduction. He was actually I say very a lot. He was super useful and informative and helpful putting together this research project for transit. So I highly recommend everyone watching going in and applying recommendations for research projects that directly relate to transit, because there are few and we need more. So don't be afraid of the paperwork. Just go on, dig in, and get your fingers dirty. It's a lot of fun. So anyway, good morning or afternoon, depending on where you are. Thank you all for joining us for today's session. My name is Mike Spadafore. I'm the Director of Mobility Management at Jayhawk, and I'm also the chair of the NCHRP Project 2304, Statewide Insurance Pooling for Transit. I'd like to give you all a very brief overview of our research work, everything we've accomplished to date, as well as the next steps and anticipated results of that project. Next slide, please. Okay, I'm repeating myself. Next slide, please. So here's where we're going to go over it. And again, statewide insurance pooling, there's our topic for today. It also coincides with the research project we've got going on. So we figured, why not put them together? Next slide, please. The objective of the research project's work, we're reviewing and interviewing current and past pooling participants. We've sent out email blasts and forwarded and re-forwarded and reminded people to send back the responses to the surveys that went out to, I can't even know how many hundreds of people between transit agencies, state DOTs, insurance companies, existing and past insurance pool participants. We really threw out a broad net on this one. And we wanted to try and determine the inner workings of pooling and provide a how-to guide for state DOTs to consider. As of note, because I always get asked this question, the research project is specific to 5307 and 11 agencies who are using less than 100 rubber tire transit vehicles at peak operations. Next slide, please. So we're hoping for two things out of this research project. The report, which is standard and customary, but also a guidebook. We would like to tackle a SWOT analysis of the overall risk management and loss mitigation strategies that could be involved in insurance pooling for transit. We want to consider cost efficiencies based on economies of scale. We don't want to just say everyone should do it. We want to make sure that it is something that's appropriate for each state or region or what have you that's considering going into a risk pool. We are covering some past and current examples, of which you'll hear one great one today later on. And also we have a guide for those who wish to pursue pooling. And that guide is also being developed to not just a how-to, but also a why not. We've got plenty of people responding to these surveys that say, oh, you know, we were in one, but it just didn't work because of X, Y, and Z. We want to share that information too. So it's going to be a pro and con guidebook, not you have to do this guidebook. Next slide, please. Our progress to date. We started back in April of 19. I'm not going to read this whole slide, don't worry. COVID happened in the middle and set us back some, but right now we just finished our data collection surveys. The consultants are doing telephone interviews right now. We are hoping in May, end of May, to review the draft documents from the consultants. Still to be determined whether it's in person or over a Zoom meeting. And then our project completion target date is August of 2023. And that's unfortunately a moving target until things get settled, but we're moving forward and it's been going great. All of the panelists we have, well, Richard's one of our panelists now that I think about it. They're all great. They're all super intelligent. They're just absolute masters in their fields. And they ask the tough questions that not everybody thinks about. So I appreciate all their hard work as well. Next slide, please. Okay. So now on to the main event. First off, I'm so glad that Kara Marcus and Richard Price were able to get these three particular professionals for our sessions today. They each represent the best of their fields and will share with us their unique perspectives of the risks and rewards of transit pooling. First off, we'll have Jill Nagy. Jill's president and managing partner at Summers Nagy Law Offices in Wyomissing, Pennsylvania. She has a client list that includes a great deal of public transportation providers, transit associations, mostly in Pennsylvania. She's very smart. She went to college 3 times. You can see that. I won't read everybody's college information, but we're super psyched to have her here. She has a very interesting and unique point of view on today's topic. So I'm looking forward to hearing from her and all the questions you have of her. Next up, the Transportation Program Coordinator in Sioux Falls, South Dakota, Brenda Schweitzer, comes to bat with like 22 years of experience in rural transit programs, which is huge for my part of the country. I'm from Kansas. And so I'm super excited to hear from her. She's active with the local, regional, state, and national transit associations. So she doesn't really subscribe to the theory of boundaries stopping the information flowing. She's also served as a national RTAP panel review board member since 2021. And as Kara said, she has some very unique perspectives to share on those documents that she briefly covered. And then finally, we have Glenn Griffin. Glenn's the executive director for the Michigan Transit Pool. He started there back in 2020. He's got just crazy experience on so many different levels. He's a licensed multi-line adjuster who specializes in litigation management. And he also has 30 years of insurance experience, 25 of them with one firm, the ASU Group. Glenn's the man to talk to when you want to know about transit insurance pooling, and he's going to give us examples and also, as along with the other panelists, sit to answer questions that you guys come up with during and after their presentations. So as Kara said, shoot those questions down in the comments bar. We'll get to as many as we can after all 3 presenters are done. and we'll get to the rest of them afterwards. And then, as Kara said, she'll post everything on the website. So without further ado, Jill, the screens are yours.
Thanks, Mike. Thanks to everyone for having me this afternoon. This is an exciting topic for me because I actually just did some board training at one of my transit authorities this morning on transit insurance options. So it kind of is all consuming for each day. So let's start with the first slide. As Mike indicated in the introduction, I have the opportunity to represent the Pennsylvania State Transportation Insurance Pool, which is comprised of 23 different members. Many are rural and some are urban transit systems, as well as individual transit agencies, some of whom purchase transportation insurance on the traditional market. So kind of what I want to share with you today is some of the pros and cons that I see of both. And then the other speakers after my high level discussion will drill down onto some of the options that you're going to see. Based upon transportation, you're really going to be looking at 4 particular options when you're considering what type of casualty insurance you might need as far as your transit agency is concerned. Some folks out there across the country might be looking at traditional market coverage options. That's going to be kind of, use a broker, get off the shelf, get some low bids, look at what your coverage options might be. And that might be from any type of national insurance company, AIG, Travelers. We see a lot of those folks in the transportation market. You're going to hear as I go on, the transportation insurance market is shrinking rapidly. Each year in Pennsylvania, I represent the pool and we meet in Chicago to look at what the coverage options might be for the pool, since it's partially self-insured and partially insured by an underwriter. And in those market and those bidders are really reducing based upon market pressures. As our insurance risk management team tends to say, big wheels means big coverage costs. So the traditional market coverage is always out there. It's just a little bit more difficult to find. And that's when you're going to see more of a cookie cutter insurance option, very similar to what you're going to see on your home and auto coverage for your personal use. Pooling, which we've been talking a lot today, that's going to be providing some collaborative coverage and shared cost options. That might be pulling folks to buy traditional insurance. It might be pulling coverage to manage risk across several shareholders in whatever that pool might look like. That pool is going to take potentially several different forms: a pooling agreement, a trust agreement, and it's going to depend on what type of coverage options that you provide as part of the pool. Glenn's going to talk a little bit about their pool. I'll just distinguish it a little bit. In Pennsylvania, the pool that we have does both property and liability coverage, which is pooled together, which also includes employment practices claims. We also have a workers' compensation pool with the same members, but it's set up a little bit differently in the form of a trust based upon Pennsylvania law. So you're going to have a lot of different options that we'll talk about as far as how those pools might be set up and what type of coverage might be included within those insurance markets. The third one is going to be self-insurance, and that's going to be just a little bit different, where you're going to be basically taking on all the risk that you might have at your agency. A lot of times you're going to see that in much larger agencies because they simply can't go out onto the open market to get their coverage. Sometimes it might be a combination of self-insurance and other options like a traditional market coverage for some type of excess carrier. So that's kind of going to be the overview and focus. And I'm going to talk a little bit very generally about the pros and cons of each, which would lead to the next slide. So kind of what I put together when you look at the options in the insurance market is going to be kind of full insurance. Again, that's going to be off the shelf, looking at a Travelers, a Selective, one of those type of companies that's going to be insuring the vehicles, whatever your practices might be. When you go to the insurance market for coverage like that, I think the slide does a really good job of saying it all. You're going to have less control. If you go to the open market, that's going to allow the adjusters to settle claims, even if you don't like those claims being settled. They're going to be really analyzing the losses, so you're not going to have a lot of control and input as far as what's going to be paid out on your behalf. But on the other hand, you're going to have a lot less risk because they're going to be handling a lot of those issues. The costs are going to be predictable. You're going to have general increases depending upon your losses each year, but it's really going to be market driven. In the traditional market, you'll get to kind of bid and you'll get pricing on whether the deductible you have is high or low, what type of coverage limits you might have. All of those different things is going to go into the traditional market. When you start to look at alternatives, depending upon the size of your fleet, the nature of your service, the type of losses that you have, that might drive you into the excess market, which is a little bit of a cheaper insurance option, and it's going to cover and piggyback on top of whatever type of, whether it's a pool or whether it's traditional insurance. That's going to give you some more options as far as higher threshold of coverage. You'll have a little bit more control in that scenario, even if you go on the open market, but that's going to be a decision based upon you as the insured on what type of coverage you're going to be looking at. For everyone on the call, whether you're in a pool, whether you're buying on the traditional market, the type and ceiling of coverage is always a critical thought that you might have to have, because you can't really measure the losses that you have. The theme we have in Pennsylvania is there's never too much insurance, but the question is, what can you pay for? What can you afford? And what's your exposure levels? So that's kind of the gamut of what you're going to be thinking about as you approach the question of what type of insurance you might have in your particular instance. So next slide. I did a little comparison, kind of thinking about some of the questions that Glenn might have, some of the studies that Mike's doing. Really, when you're looking at insurance, especially now when the market is extremely difficult, insurance markets right now are under pressure that's not necessarily driven by the transit industry, but factors you can't control. Certainly, we just came out of a pandemic where there's a lot of business loss and potential for exposure there. We've been seeing natural events where insurance markets have to cover them one way, shape, or form. So even if you, for instance, didn't lose a fleet, if they're looking at your state that has had a lot of natural events, that's going to naturally drive up the cost of insurance in the form of social inflation. So you really want to be thinking about, hey, where am I? Are my costs getting to a point where I want to seek alternatives and maybe explore what those alternatives might be? If you're in a place where you have a pool, certainly that's the conversation you want to have if you're on the traditional market. If you don't have a lot of losses in a small fleet, traditional insurance might be the way to go. Going through some of the pros and cons, if you're in a pool like Michigan, like Pennsylvania, we save a lot of time each year because we don't have to go through a bidding cycle. While we might have excess insurance, the pool's taking care of that. We're not going out. We're not dealing with our brokers every year to worry about renewals. We know if someone's going to actually bid on our insurance. So that's going to save some administrative time. And being in a pool from a standpoint of, are you going to be switching traditional carriers periodically? You're going to know the ground rules if you're in a pool right from the get-go. I have some clients that go on the open market and maybe 5 years ago had travelers, for instance. They had one set of criteria, one set of things that they had to adhere to from a risk management perspective, different reporting, different adjusters, and then over time, because travelers might not have been successful in a bid, have had to switch to a totally different market, to like a selective, for instance, and they've had to readjust with accident reports, different risk management strategies. And that's going to be kind of the nature of the beast when you're looking at an open market bid periodically, whether it's every 3 years, every 5 years, to look at the market. So that bidding cycle is just something you want to have in the back of your mind when you're in the traditional market, that you might have to be prepared to be nimble as far as what changes your staff might have to encounter as you change insurance coverage. Sometimes pools will allow you to use leverage for discounts, especially if your pool is self-insuring a portion of a loss and then you're buying excess insurance. Once you have a large quantity of members and a large amount of money that you're spending with that excess carrier, you might have some leverage as far as, hey, if you want to keep our business, here's what we'd like you to do there. Now, one of the drawbacks for a pool might be additional risk because, you're all pulling your losses, you're putting in certain monies to hope that the rest of the organizations are just as good as operations as you are. So you're kind of buying at times maybe risk for others. as I noted here, there's not necessarily a cure for management disinterest. So if you're really managing your risk, doing appropriate risk management strategies, and a member across your state is not doing the same, you could potentially buy their misdeeds. So I think that, if pooling is the option, you're going to have some rules, some regulations, some check marks could eliminate the risks and deeds of others. But again, you're only the captain of your own ship, so you can't really tell what others are doing. So that is one of the drawbacks of a risk pool that you have to be aware of when you enter into that type of group or organization, what the rules might be and what the expectations for not only yourself are, but for the others. In any event, whether you're buying from the traditional market or pooled loss, appropriate risk management strategies are the key. If you're buying from a traditional market and your losses are through the roof and you don't have appropriate strategy, those costs are going to continue to go up. If you're in a pool and you don't have the appropriate risk management strategies, depending on the rules for that pool, you might be ejected, you might pay additional costs and or fines, depending on how the pool is set up. So all of those things are to come together, but at the end of the day, risk management is going to be your best advocate for your insurance costs and keeping things reasonable. So the next slide. Another thing that is really going to, in my opinion, affect costs and whether or not the open market's going to continue to insure public transit agencies is the state that you're in. I see and I look at fairly routinely insurance trends state by state, because I know whatever's happening in, say, Idaho could affect us here in Pennsylvania, in Florida might impact us in Pennsylvania. And looking at the different laws is really something that insurance companies are looking at very deeply. For instance, here in Pennsylvania, the public transit agencies have a very robust level of governmental immunity. Our losses are capped. The type of damages that are recoverable are capped here in Pennsylvania. So the insurance markets really like that as a protection and insulation from hedging their risk. So those state immunity protections are going to be critical when you're going out to the market. You want to stress that, whether it's your pool or whether it's open market, traditional insurance, because instantly they're going to, your carrier is going to be capped in their exposure. Joint and several liability, those types of things that protect defendants are going to be much more attractive to the open market. So, while you're comparing and while you're looking at a lot of these studies, it's important to factor in what type of protections you have as far as a government agency or as a potential defendant, because comparative negligence issues and all of those things are going to ball into what type of risk you are for any type of pool or insurance company. And believe me, underwriters, whether it's for my individual transit agencies that buy off the open market or underwriters for the insurance pool, ask me fairly religiously for a legal update on any changes that might have happened in Pennsylvania as far as providing more exposure to a public transit agency. So while all the people on the phone might be in operations, it's really critical to kind of be looking at your individual counsel to say, hey, has the law changed? Is something more beneficial in here that I can use as a carrot to get additional coverage or cost savings based upon the changes of the law in my particular state? So those are important things to look at that often go unnoticed, but really have an impact on what the cost of insurance might look at your agency. Next slide. When you go into the open market, a competitive system is extremely critical, and it's not just cost. And we're going to get to that to the next section. But insurance markets now, especially in large fleet scenarios or even small fleet scenarios, really can put together a package of services for you. So when you're doing the competitive bidding scenario, something you want to keep in mind, cost is always a factor in public transportation or any public sector agency, but the services that you're going to get could really offset other costs down the road. So looking at the bid process, including all the things and expectations aside from costs that you want to have in there, is critical. The other critical thing is the ability to negotiate prices if you have good loss years. You want to include that potentially in your RFP or whatever the case might be. and communicate your expectations and your desires to your broker to make sure that they're covering all those bases. For example, we just negotiated at one private insurer that we really wanted to have control over settlements. It was very important to us that if the insurance company was going to settle claims over $25,000, that the executive director have some say in that because of repeat offenders against her agency. So that was very valuable to us to really kind of stop the bleeding on claims for repeat offenders. It might not have been a cost savings, but it certainly, I think in the long run would be something that saves costs. So all these different things you want to be looking at and really talking with your broker, like what type of services you want in addition to just looking at cost as far as deductibles, cost for the insurance package itself, and ceiling for coverage. So please consider all those things when you put your package together. If you're in the traditional market and go out for coverage, or if you're thinking about joining a pool, you want to ask what those services they might provide might include. So next slide. I talked a little bit before, and I'm not going to belabor this too much, but when I say that there's issues in the insurance market, from 2019 to now has been a very tough year for insurance, which is going to have a trickle effect for all the consumers in the marketplace. From 2019 to 2021, the pressures on the insurance market have been crazy as far as a record-setting trend of 1 billion plus property losses. And what I have here is wildfires, hurricanes, civil unrest. That's really driving the market. I put some notes on here about social inflation. That's really the increased cost of litigation, plaintiff-friendly juries and judgments. That's going to continue to drive rates up. So as much responsibility as you have within your pool and within your own agency is helpful. But again, as the market trends continue, transit agencies, big wheels, big bus is kind of bearing the brunt of the market conditions themselves. So that's going to be the flavor, whether you're out on traditional marketplaces or within a pool, just because of third-party pressures that we have zero control over. One of the things that's not really a focus for today, but cyber threats really continue to impact the insurance market. Again, whether it's in a pooling scenario or traditional marketplaces, transit agencies across the country are suffering from trying to do risk management strategies for cyber. And that's not only impacting the cyber coverage arena, but it's trickling into the property and liability loss components as well. So it's driving up hard market costs for all sectors of the insurance market. So be aware that that's out there. You might say, why does cyber affect us? Well, if Travelers is paying out large claims for other third parties, that's going to trickle through all lines of business for those particular agencies. And I'm not picking on Travelers or advocating for them. They're in my brain because they represent several of my clients that aren't in the pool. So that's an easy cherry pick for today's discussion. And again, geography, legal jurisdiction, all of those things are going to factor into traditional coverage. Large cities, for example, are averaging about 30% higher in verdicts than they did in 2019. So that's going to trickle into rural areas as well. Insurance companies do look at verdicts within your jurisdiction, whether it's a very small city or rural community. When they're underwriting your package, they're going to be pulling jury verdicts, even from your small jurisdiction when they try to write your coverage. We consider that in Pennsylvania when we look at the pool in our analysis as well. So all of those trends are not only going to affect insurance market conditions, but you as an agency when you go out to obtain those coverages. So next slide. One of the things I wanted to put in here is a comprehensive list of insurance. We often don't think about these things, but again, this might be where you get into a scenario where for some insurance coverages, you're in a pool. Some you might have to buy off the shelf coverage just because often pools might not include some of these, but you really want to talk to your broker or your pool to see what's available. So property coverages, maybe including equipment breakdown, your general liability. I'm not sure if anybody in this sector has law enforcement or security, but is that the type of coverage that you need? Is that something you're going to have to go on the open market for as opposed to a pooling? Public officials, errors and omissions. There has been a huge proliferation of claims for your board members. They're starting to make decisions they didn't have to make before. So that's certainly coverage you want to be sure is in place at your agency. Cyber, we're seeing all kinds of cyber threats. Looking at publications, it is hitting the public transit arena. You do have confidential information potentially for your shared ride services. We just saw the slide earlier about HIPAA. So cyber is critical for your agency to be thinking about, and you might not be able to get that without a lot of risk management strategies in place. Fiduciary coverage for your pensions. That's certainly something that you can't forget about when you're looking at insurance options. And same with environmental pollution and liability for those fuel storage tanks, all of those different aspects. You want to make sure that that coverage is in place, because sometimes brokers are not looking at you in the traditional sense of all of the facilities and risks that you might have on property. So I don't want to forget about this list of coverage. So, maybe go back today, say, hey, do I have public officials coverage? Do I have appropriate limits for environmental for that fuel tank out there? These are all critical coverages that we oftentimes forget because we're so worried about those bus accidents that we see on the street. A couple more things. I talked about it earlier. Whether you're on the traditional marketplace or in a pool, what type of services is a critical foundation for what you have to do? Your operations supervisors have enough on their plate. So what services? You're paying a lot of money for insurance, whether it's pool or traditional. What services do you have? Is there crisis communication hotlines? That's critical for our pool, because sometimes we have an executive director driving the bus in the morning and doing crisis communication in the afternoon. So is that service available for them, that they can pick up the phone and say, hey, we just had a fatality today. What can we do about it? Is there risk management support? Do you have someone on hand that can come out, walk through your garage, look at lifts, look at your preventive maintenance programs? Is that support there as part of your program? Claims adjustment. Are you getting the best service that you've paid for? Or do the adjusters kind of just push you to the side and don't settle claims or don't try to manage those claims? All of these things are part of the cost and part of the program that you want to develop. So I included industry knowledge, whistleblower hotlines. All of those are services available both on the open market and integrated in pools, and available for you to think about. And just real quick, and I don't want to usurp my time, I just want to talk about risk management programs. More and more on the open market, risk management programs are being fundamental for you to secure your insurance coverage. So, when brokers are out trying to get coverage for you, the carriers are asking, what type of risk management program does this transit agency have? Do they have appropriate PM policies? Do they have appropriate personnel handbooks? What is their accident investigation training? All of these are going to be in there. And even traditional insurance programs are doing inspections, asking for justification why losses are including. So your risk management program is going to be critical to keeping those costs down, no matter what the scenario is. Many insurance pools have an inherent risk management program that, again, participants in that pool might have a carrot or a stick. If you're not complying with appropriate risk management objectives, do you get the opportunity to stay in the pool? Our pool, for example, in Pennsylvania, everybody gets scored each year on policies, risk management objectives, facilities, and maintenance. And if members are not complying with that, they get put on a list where they have to, it's called a support list, where they have to come up with ways to manage that risk a little bit better, or they could face potential pool expulsion. Going to the next slide. Again, we have mandatory policies and procedures, mandatory hiring criteria to make sure we're getting the best drivers. A lot of open market insurance companies are also looking at hiring criteria and training criteria to make sure your drivers are appropriately trained and or vetted before hiring, and are making sure that you have appropriate contracts in place, especially if you have construction contracts or third-party contractors that are providing part of your service. Both open market and pools are making sure there's rules in place for indemnification and their insurance coverage. So that's all kind of part and parcel of the program. And kind of the last slide that I have, your insurance company should really be also helping you and being a partner in managing your risk. You know, are they providing that support you need? Are they giving you objective measures to look at how your transit agency is function? Are you getting loss reports so you can see trends at your agency? Whether it's open market or the pool, that's really something you as the consumer, you as the customer should be demanding of your insurance program, because that's really the only way you can manage your risk, by looking at trends. And I just want to kind of give one plug just to show you how successful our risk management program in the pool is. Here in Pennsylvania, I'm going to brag for 1 second, not take away anything from Glenn. We've tracked 3,120,000 man hours in Pennsylvania since the pool's inception. We've only had one driver fatality. If I was going to look at OSHA numbers, we should be having 2.6 fatalities a year. But our risk management is so robust that, you know, we can really brag about that, because we really hold the members to the fire. But I'll tell you, you should be demanding the same of the open market to be assisting you, looking at your trends so that you can tell, hey, look, we have a real problem with pedestrians. What are we doing wrong here? Do we need to be working with our drivers on additional training? The insurance trends in your losses, again, open market or pool, can really set the tone for your risk management strategy. And it's something you should be demanding of your carrier or your pool as you go through. So it's kind of just an overview of what's out there in the market and what you should be asking for. And otherwise, I'll turn it over to my colleagues to kind of drill down to each of those high-level overview aspects that I touched on as best I could when looking at insurance questions and problems.
Next will be Brenda Schweitzer, the Transit Program Coordinator for the City of Sioux Falls in South Dakota, who will be talking about risk management for rural transit systems. Brenda?
Oh, good afternoon. And Jill made a great intro into what I want to talk about. And I probably tend to work on a little higher level and don't dig into the weeds too much on this. So we all may have some kind of a idea of what transit risk management should look like, and you're probably all right with that. You know, I tend to, I have spent 22 years in the rural transit program, just recently moved over to the small urban program, but my former life as an insurance agent has truly benefited me with the business as a whole, and so the concept and understanding is a little bit easier. So as we get into this, you know, really what is transportation risk management and why is it important? And risk management is the process of controlling the chance or possibility of financial, operational, or other loss. It's a proactive course of action, and the more predictable an event, the less risk involved. And I can dumb it down to this, you know that every time you back up, you're probably going to have a problem. A no back policy can play into that. It's controlling your risk a bit. So risk management protects the system's assets and income by identifying all of the possible causes of accidents or losses. A lot of times we're not proactive, we're reactive, and if we can get ahead of that, we're doing much better. So take deliberate, planned steps to either prevent or absorb the losses, and this would include your safety plans, your succession plans, your training plans. So risk management benefits, you know, they minimize the financial exposure and provide a more reliable, stable system, and protect you from negative publicity, which we all know has a great impact on us. So what are the risks facing transportation industry right now? And you may look at it differently. These are the ones that stood out to me. So advancing technology. Don't get too far behind on your technology. Participating in your industry conferences and trade shows, networking with projects, seeking out projects that have got technology you're looking into. Educate yourself. And Jill mentioned too the cyber exposures. That's a hot topic right now. A matter of fact, in the business here that I work with within the city of Sioux Falls, the email came through today on some factors to look into and watch over. So that is definitely just a hot topic. So with that, you know, as far as having an contracting out for a IT person, maybe you have in-house person, whatever, even if you contract out, you need to keep on top of that. Perhaps you have a natural interest, somebody that's locally or within your system interested in IT. Maybe a driver, but they're an IT geek. Get them on board and work with that. So the operations exposures, there are many of these, and I can think of some of them offhand, and you think about your own as well. So toxic employees, you know, the risk of embezzlement, you know, what policies and procedures do you have in place there? The lack of qualified employees, or do we put them in a position that they're not qualified to do, and with certain deals, whether it's your HR, you know, oversight, and also adequate number of employees. I think, you know, funding itself has challenged all of us on that, and particularly for a lot of our small operations, we all wear many hats, you know, and it was mentioned at the beginning too. You could be driving, and you could be attending emergency management meetings within, you know, the same few hours. Market fluctuations. So don't we all know about this? Our computer chips right now. Locally, the transit program I'm working with now said they can't get tires until August. So they're working diligently with their team on protecting those tires. Fuel costs, that's another exposure. So you have some of these, you know, the computer chip and your fleet is challenged. Fuel costs are risk to your budget. So there's a lot that plays into there. Jill noted too, the natural disasters. And I've got the same note here, Jill, is for the last 3 to 5 years, we have seen every natural disaster that could possibly be experienced. And so proactive on the plans for that. You're not going to be able to plan for everything, but to be aware. Again, I'm going to go back to attending your industry conferences and so forth. One of the best seminars that I attended, it happened to be up in Fargo, North Dakota, and it was shortly after they had a major flood up there. So the presentation involved, you know, what they learned from that, what they would do different, what they did right. That was just a wonderful example of where we can go to find out and not have to reinvent the wheel. Let's learn from others. So additional risks, health events. I don't think I really have to go any further on this, but also it includes, like I mentioned, emergency evacuations. This is where your contracts with Red Cross come into play, as well as a really good, strong relationship in collaboration with your emergency management. I feel that that's essential. So then the next few I've got, I'm going to put these together a little bit. The driver shortage, the new CDL requirements, adequate support staff, employee retention and recruitment. All of these pose risks that relate to each other. The cost of hiring and training is exceptional. And without adequate staff, then you're looking at overtime, kills your budget. Then you're also looking at burnout. What kind of a positive work culture do you have in place to help with some of that? So I know we're all looking at those very things for retention and recruitment. And I think we have to constantly step it up to work at keeping who we have. The regulatory compliance, I don't know about you all, but I just feel like it has been really, we've been inundated in the last few years with additional compliance items. So who has the time to do this? And what happens if you don't make the time? And how can you delegate it out so everybody has an understanding, has a part in it? But it's really crucial, because without it, then your funding programs are challenged. So the next one here on infrastructure challenges, I could probably go on with this for about 2 hours, but I'll keep it brief here. The size of your facility, the program that I've worked with, we had a system that saw a lot of growth. We ended up challenged with being able to even garage our fleet. So of course the fleet then gets banged up inside the garage because you're trying to fit as many as you can in there. Your office space is limited. There's very little room for a confidential conversation. We had to move the dispatch team to the second level. There's not a elevator there. We're breaking ADA regulations, and so therefore on your procurement plans, you get all of that in place to make sure that you get a facility that meets the needs and the regulations. And also communication. The communication is challenged. But I will emphasize that the lack of space and inefficient space can create a hostile work environment. And we all know, you know, we hear about the drivers and the loose cannons out there, but even in-house. So what does a risk management program look like, and what can we control? I guess simply being aware of our exposures and the risks is the first step. You can go through a really intense process and drill down. Again, I think this might depend on your size and your level. Also, who do you have that can put these plans together? And I feel that getting everybody on board, having them know what your mission is, what your goals are, and I include the board of directors with this. And then how do you implement oversight? Delegate out, but you have to review that frequently, make sure that they remember what their responsibilities are under that. So I do feel like those are some threats that we can overcome. And with that, I'll mention the resources that you can use, and that includes your insurance programs, your local resources, emergency management, your city, your county, develop those relationships. Maybe a local HR association. Many have an attorney on their board. Local advocates, they're a great resource as well. And national RTAP, I'll mention them several times here. So within that, don't make it too complicated, and be able to implement it. So as far as what risk management systems have been proven effective in developing system safety programs and policies, work with developing teams of that include a cross section of your employees. Your HR services, using new approaches for hiring and screening employees. I can't say enough about this in that focusing on probably the smaller rather than the larger. You know, with agency growth, things change. All of a sudden you've got, and the other thing that we're experiencing out here in the Dakotas is the consolidation of programs. So you consolidate with another transit program, and all of a sudden your employee numbers trigger you into a whole new position. Are you prepared for that? How many people are covering your HR exposure? Do you have somebody doing one job, another one dealing with, you know, with the insurance aspect, all of that? It is, it's a big exposure. So if you don't have somebody in place to cover the whole umbrella of that, I'd strongly suggest contracting it out. And I would also consider a new position. A new position is putting HR in, again, budgets make a difference there. So providing onboarding and refresher driver training. I think refresher driving training, it should be at the top of most of our lists, right? But it's just a reminder. So provide onboarding. So I'm going to take my situation here. I just started within the last 6 weeks, and working with a bigger organization. They have a pretty intense communication system. Well, I can tell you the first phone call I got, I never could take. I didn't know whether it was a soft phone, whether I picked up the handset or what have you. So in my mind, as far as onboarding for here, let's spend a little more time on the IT level and the communications. So conducting job performance reviews for employees, I feel that this kind of forces you to address what you have possibly been avoiding. Do you have that toxic employee? What's their driving record like, and so forth? Many employees wait for this and many dread it, but I think being consistent with it, I know that it wasn't always my strong point, and it should be. It just should be. So then the next item I have here is offering employee incentives for safe job performance. It can be simple or it can be elaborate. Set your parameters and communicate those out so they know what those parameters are. Celebrate work anniversaries, milestones, such as accident-free miles, and awards. So, and delegate that job out to somebody that enjoys doing that. You know, is there a natural party planner in your organization? Because it all takes time. It takes time. So the next item I've got here, as far as proven effective systems, creating passenger safety messages. Involve your transit team. You know, at your regular team meetings, pass around who's going to be responsible for the safety message at this meeting, and what's it all about? Is it something that's relative to what's going on now? Developing and implementing vehicle maintenance procedures. So with that, does your software provide tracking and a reminder system for regular maintenance? If so, by all means, make sure that you use that. The key to that is data entry. Can't get out of something that you don't put into it. And then reporting procedures. The first one that comes to my mind is workman's comp. Does your team know what the requirements are to make sure that they're covered under a workman's comp policy at the time of the claim? Do they know the time constraints and the process accordingly? And keeping in mind that during this workman's comp conversation that, you know, a good safety plan and so forth will help keep those injuries down, which will keep the loss ratio and your risk factors down. Will apply for credits on your insurance. So I've got toxic waste disposal, and some may or may not have that involved in their system, but know the OSHA regulations. And then using security systems to protect your property. And again, these are only as good as they are if you have a policy to check them. And you know, it's the last thing you want to do is when you have an incident on a bus, you go to pull that SD card or however your system may work and find that, oh, well, our system has failed and so we don't have that. We know that when it has worked and we use it, it's exceptional. So your fleet and your building in premises using security systems, keyless entry. You know, you have a disgruntled employee, that employee is no longer there. Rather than changing the locks, you could change an entrance code. Just basic things like that. And then forming insurance pools, just as Jill mentioned, and by all means, do you qualify for that? Is it something that you can pull into your system that works hand in hand? Have a solid correction and action plan for policy violations and follow it. So with that, you know, you've got your a safety officer position in your organization. Is it possible? Consider contracting that out. And then each individual system needs to determine what will work for their system and what practices are important and such for their system. So capitalize on your resources, and Jill stated these really well, provided by your transit associations, your insurance carriers, the potential out there for your carriers to also apply credits, and then national RTAP. So the strategies to manage risk control. What do we know? The risk transfer, insurance is transferring our risk, having a policy. What kind of deductibles do you want to put in there? Making sure that you've got all your bases covered on the different insurance forms. And then possibly contracting out duties can transfer that risk. Risk removal. I go back to a toxic employee, old equipment, so forth. And then retention, of course, that's going to be possibly a deductible, a strong training regimen, and that's all retaining that risk and dealing with that as you have to. So I guess to keep going here, you know, when you think beyond the finance and safety of the risk management, I think culture has got to be a strong part of your program. A positive work culture can reduce discontented employees. I had a conversation the other night with my oldest son, who happens to be a banker, and I was talking about a culture and, you know, once it's gone, or building that culture and developing it. And he said, yeah, culture isn't just something, culture is everything. I guess that was kind of a proud mom moment. I thought, absolutely, it really is. So work to develop your company's positive work culture. There's going to be some on the team that don't quite get that, but a majority of them will appreciate your efforts. So, you know, recognitions, awards, maybe family events, a new child being born, incentives, possibly create some kind of incentive program that would earn extra vacation or allow them some other benefits. So I also encourage and support volunteerism. If there is a special event that the chamber is sponsoring and one of your employees is looking to be involved, allow them the time on your dime to be involved. Ask them to wear their logoed shirts, coats, what have you, but then they get a buy-in. They get a buy-in, adds to culture. Non-sanctioned social events. I had a driver come and put on the whiteboard, which was a communication tool, non-sanctioned event, social event, Thursday night, Pints and Court, 6:30. Anybody interested? There's going to be some people that are not interested and won't be involved, but the handful of us that showed up, it it was great. There was not work talk there. It was just getting to know each other. And again, it's just a little cultural thing. Some are going to buy into it and others aren't. So towards the end here, the other part would be a PR crisis. And I think we've all experienced it. We've all been threatened by it. But it occurs when negative events or reviews threaten to impact your reputation and position in the community. And it just really takes very minimal situations to cause that, but have internal policies. Just a basic one, I'm just going to give you a thought, would be social media. What do you allow your employees to do on social media? Emergency management and operations, have a policy and a plan. We've gone over that. Be proactive and ready. And then at the time of a crisis, whether it's a natural disaster or what have you, have a company spokesperson designated. And that might not be the executive director. It might be somebody else that's more comfortable. Maybe that's more their forte. But have, that being said, have somebody designated, but also have the whole team involved. And so you're on the same page to know what you want to do, for damage control. And then keep the statements factual and concise. So I just put a couple of basic examples of risk management out there. Onboard training. If you got 4 people doing some onboard training, do you have checklists? Is everybody following the same thing? What are you missing? So the inconsistent training there can involve, Betty saying, John didn't take my 10 bags of groceries to the front door, but Betty does. It's like you have to know, and everyone has to be on that same page. You'll get caught with it every time. And outdated technology. If it's inefficient, dispatching system, routing system, your surveillance system, it costs money to replace that. But if you don't, it may cost you a lot more. So, I don't know what examples might come from you, but again, I kind of kept that high level and just get you thinking a little bit. So I've got those references there. I can't say enough about national RTAP's support on so many levels. So make sure you tap into that often, and thanks for attending.
Thank you so much, Brenda, and thank you, Jill. And keeping tabs on the time, want to let you know that I know we will be going a little over, so you're welcome to, and I hope you can stay on for Glenn's presentation in the Q&A. But if you are not able to, know that it will be recorded and you can still ask questions and they will be answered after.
Thank you, Kara, and hello, everyone. Really pleased to be able to join you today, and thank you for the opportunity. I am going to speak about the Michigan Transit Pool, or MTAP as we call it, and provide some examples of how we were formed and how we operate on a day-to-day basis. Also, I'm going to explain our annual retrospective adjustment process, and that's really an accounting process that we use on an annual basis to determine whether we're going to pay refunds or members are going to get billings based on our claim activity during the year. So it compares the incoming revenues from our premium deposits as opposed to our claim costs for the year, as well as fixed and variable costs. So next slide, please. A history of the Michigan Transit Pool. We started in 1987, and it was in response to rising insurance rates, which is similar to what all of us, I think, are going through these days. And we are getting some inquiries because of those rising rates. And the pool started its organization before 87, but they began to work with the state in trying to go live, as they did on December 1st of 1987. They worked with the state to obtain their self-insurance certificate. And from that point, they were able to develop the pool. And that's really one of the great advantages of pooling is the flexibility to develop a pool that fits your needs, and you can tailor to the type of services and needs that you have to all of your members. At the time, MTAP had 18 charter members to the pool. We've grown to 33 over the years. And initially, the beginning of the pool was due to the soaring auto liability rates. And we're here in Michigan, where we've had a long-term history of having the highest auto liability rates in the country. So the pool was started to combat that, and 36 years later now, it's been a success, and we think we offer a lot of value and just an opportunity for our members to save on insurance dollars and really have a role in the claims process as well. So why don't we go ahead and move on to the next slide. And we'll get a little background in terms of the Michigan Transit Pool. Jill earlier mentioned all the different types of insurance markets that were available out there. MTAP elected to become a group self-insurance risk-sharing pool. And we operate under an intergovernmental agreement that's signed by all of our members. We have rural, medium, and some small urban members. The majority of the members are at the rural and medium-sized member capacity out of the 33 that we have. We are regulated by the Department of Insurance and Financial Services here in the state of Michigan. We submit an annual financial audit to them every year, and we are audited by that Department of Insurance and Financial Services every 3 years. Our transit pool is really run by a board of directors, and that's comprised of one seat for each member of the pool. So we've got 33 board members, and the day-to-day operations are actually overseen by the executive committee of the pool, and that's a 9-group membership comprised of our 4 officers, a president, vice president, secretary, and treasurer, and then we have 5 board members that also sit on that executive committee. The pool elected to hire a third-party administrator to perform the day-to-day activities, and actually the pool has no employees. They hired AASHTO Group, who I'm actually employed with, and we provide executive director, administrative services, along with claim handling, loss control and safety services, and accounting services to the pool. And again, we've worked in collaboration with the pool management over the years to establish the type of pool that they were looking for, the needs that they had, and what they wanted to supply to their membership. And it's been a good marriage. ASU has been with the pool since we started in 87, 88. And have enjoyed that 36-year partnership with MTAP. MTAP is actually composed of 2 different trust funds. So we do actually have 2 separate pools. One is the liability trust fund, and that is the auto liability and general liability coverage lines. We also have another trust fund that's called the direct property damage trust fund. And that's not exactly building and contents coverage. It's actually the physical damage coverage to our pool vehicles, and that would include buses, administrative vehicles, service vehicles, along those lines. And members are welcome to join both funds or just do one. We've got a couple of members who are just a member of one pool, but most of them are associated with both the liability trust fund and the direct physical damage. Next slide, please. What does MTAP provide its members? Well, we have a list here of some of the coverages and services that are provided to the members. As I mentioned, we have a liability trust fund. And within that coverage, we provide auto liability, including no-fault PIP, general liability coverages, including sexual assault and molestation, employment practices liability, public officials, and cyber liability. MTAP is adapted to coverage changes and emerging risks over the years. We have what's called a memorandum of coverage document on both the liability trust fund side and the direct property damage trust fund. And the board is able to make changes to that coverage document when the need is there. We just require a majority approval by the board. And it's been a good opportunity over the years to be able to change and adapt to changing insurance markets. And again, that's part of the advantage of pooling. It just offers you that flexibility to address not only your long-term needs, but immediate needs that come up. And so our coverage on the liability trust fund side is it's an ultimate $5 million coverage. It's split up in terms of MTAP having the first self-insurance layer of $2 million. And then they have purchased reinsurance through Transit Re Limited for $3 million. So it's 3x of 2 with Transit Re Limited that gives us that $5 million total. And Transit Re Limited is actually a partnership venture with our other pooling partner, which is Ohio Transit Risk Pool, or OTRIP. And that was developed in 2005. And again, that was a response to some of the rising rates in the excess and reinsurance markets. And it's been a very good partnership for both MTIP and OTRIP over the years, and has been a success and has allowed us to deal with both excess and reinsurance market rates in a much more reasonable manner than what we've seen over the commercial markets. Taking a look at the Direct Property Damage Trust Fund, this is where we provide comprehensive and collision coverage for both our member vehicles. Once again, that's the buses, the service vehicles, and administrative vehicles. Our coverage layer on that is MTIP provides coverage up to $100,000 and then does purchase excess insurance coverage through the commercial market for up to $400,000. Then we do have scheduled vehicles. And as I'm sure some of you are dealing with these days, we're seeing the introduction of more specialized vehicles, CNG, combined natural gas, electric vehicles, hydrogen vehicles. We're scheduling those individually based on some of those increased values that you see. And it's also caused a conversation that we're going to have within the pool. Do we need to transition our policy limits to allow for some of the values of these newer vehicles that are coming in for both collision and comprehensive coverage? And also we have a directors and officers coverage that's in effect for both pool management and our individual board members. Some of the services provided by the pool are claim handling services and legal defenses for lawsuits that are brought against our members. ASU provides those claim services. We also have a pool of attorneys that can be used depending on location within the state of Michigan. Our members do have the ability to select their own attorneys. A lot of our rural transit systems, fortunately, don't have that much litigation, so they're looking for counsel if they do get into a situation with the lawsuit. And we can make recommendations at that time with some of the proven defense attorneys that we've used over the years. We also have risk management services that provide loss control, safety audits, a safety policy handbook, financial assistance for training, regional training and webinars. And we are also addressing emergency safety concerns through our dedicated loss control specialist. And finally, the semi-annual member newsletter. That's something that we issue that just kind of brings our members up to date on industry topics. We also have sections on safety, legal matters, as well as a member spotlight every year. Next slide, please. As for the benefits of a pool, and this is what I've kind of spoken about so far. We have the broader coverage ability, and our members decide what is in our coverage document. And that MOC is contained in both liability and the direct physical damage trust fund. They've been adjusted over the years, those coverages, and we've even specialized with some of the endorsements. We made a movement to that a few years back for sexual assault and molestation, employment liability, and cyber coverage. Flexibility as well. Not only do our members have a chance to craft their coverage documents as a board, but our members also have a chance to get involved in the day-to-day claim handling. All members have what's called a self-insured retention, or SIR. That varies by member, but it gives them the ability to have a role in their claim process and provide authorization to ASU in the claim handling as to what should be paid and what should not. Once a claim gets over a member's self-insured retention, we have what's called a special risk committee in the pool. And that's comprised of the officers plus the executive director. They get involved in terms of making authority decisions for claims that have exceeded the individual's SIR. And so we're typically dealing with some more exposure related cases, some of our higher dollar cases. However, it can still be involved early on with some of our smaller members that have a small SIR of just $5,000. And lower cost, we have no agent commissions. We don't sell the insurance. You're just a member of this pool. So really your expenditure are your premium deposits. And if we have bad claim years, there might be a retrospective billing, as we'll talk about later. But our goal is to return the premium deposits every year in the form of refunds. And that happens when we've had good claim years. Sometimes when we have some serious claims with high exposures that have required payouts, those could lead to billings, but we've taken a look at all of our members over the year, and by and large, they have made out very favorably as opposed to the commercial market by, again, getting those premium dollars that were set aside for insurance back, which is something that you rarely see in the commercial market side. And then finally, stability. Our premium deposits are not based on the cyclical nature of the market. They're really based on our members' passengers, miles, and hours, which are reported every year to the Michigan Public Transportation Management System. We have a formula that takes all three of those and shows us where the member stands overall with all of the other members within the pool, and they're assigned a percentage amount in terms of what they have to pay of our annual budgeted claim expenses. Next slide, please. Let's take a closer look at our liability trust fund. And in both of our pools, a member makes an annual premium deposit each year. And all these dollars are actually the members. They go into the overall claim account, but they are accounted for separately by member. And as I mentioned, their premium deposit is based on that PMH factor that we've developed. So they pay their percentage amount. And again, they may get that back if the total of all costs throughout the year end up being less than the premium deposit that they put in initially. The members also earn interest on that deposit and investments that the pool has made throughout the year. Claim costs for the SIR as a self-insured retention that I mentioned earlier. The individual member does not have to pay dollars when we're in the process of paying a claim. They've already spent that money by paying into their premium deposit for the year. The claims are actually paid out of a claim account, so they don't have to worry about whether they have to pay anything or get a refund at the end of the year until we do the end of the year accounting. Our current coverage year is December 1st through November 30th. And I mentioned the SIR earlier. I've got a look here at the 6 different SIR levels that we have. Our rural transit systems are typically in the $5,000 to $25,000 range, which means they, in essence, pay those first dollars on a claim before we get into the risk shared portion of the pool. Our medium-sized members are in the $50,000 to $75,000 range. And then finally, our urban and larger urban members at $100,000 and $125,000. Again, the majority of our members are in the rural and medium-sized membership. Administrative costs are allocated to the members by our PMH factor. Our risk shared costs are allocated by a modified PMH factor. And what that is, in essence, is their PMH factor multiplied by a factor for their particular SIR. So if we have risk shared claims that are paid out, we all participate in that. And the individual member's percentage is based on that modified PMH. And again, down at the bottom, each year is accounted for separately. So the year does not close out until all the claims are closed out within that particular year. So it's quite an accounting process that we have. We're dealing with open years, not only this year, but prior years in the past. Here in Michigan, we've got the burden of dealing with lifetime no-fault PIP benefits. So theoretically, you could still have an ongoing claim for the rest of a person's life if they can show that the medical treatment is related to that automobile accident that they had. So that can create quite a challenge in terms of having open years that can really just go on and on. Next slide, please. And this is the direct damage trust fund. Once again, members make annual deposits into that fund. This fund is based more on the book value. It's an accounting book value that the members submit to us every year. And right now we're charging $1.40 per $100 of book value for the members. And the initial level of coverage for MTAP is $100,000 with a self-insured retention of $10,000. Again, this is the flexibility afforded by a pool where you can change those SIRs and your coverage levels, and offers the ability to adapt once again as the insurance markets change. Each member has a $10,000 SIR, and the administrative and risk shared costs are allocated within this pool based on the member's net book value, and that's a percentage basis as well. And just like the liability trust fund, each open year is accounted for separately. And next slide, please. We'll take a look at the retrospective adjustment. And this is the accounting process to determine whether it's been a good enough year to issue refunds to our members, or in bad claim years, we may have to issue a billing to cover those risk shared payments that were made. Every year at year end, we do a reconciliation of the revenues and expenses, and we do that for every open coverage year. If the deposits plus interest earned is more than the expenses, the members will receive a refund, again, based on that modified PMH factor that I mentioned earlier. And if our system's expenses exceed our deposits plus our interest earned, there will be a retrospective billing. And again, the claims are kept open until they're settled. Typically on the physical damage side, those settle rather quickly. We're just looking at estimating damage or evaluating the amount, current book value of vehicle in a total loss situation for a payout. And that reconciliation process is done each year as well for the DPD side. And I've got an example coming up just on the accounting process to show you a very general example. Our actual accounting process is a lot more involved in this, but this will give you a little walkthrough in terms of how we determine whether there are net refunds to members or net billing at the end of the year. This is really a COVID-based example here. Unfortunately, claims are lower during this time. So you can see we had initial deposits for the year a little over 2.1 million. Investment income for the members, 76,000. This contingency reserve here is really a capitalization expense that we expect all of the liability trust fund members to pay over their first 15 years of membership. It's a small amount that's based on a like-kind member that is used to not only capitalize their membership in the pool, but the overall capitalization of the pool. You can see it's shown as a negative there, which reduces the total revenues since that remains the member's money. On the expense side, you can see the paid claims for the year at 54,000. We got 26,000 reserved for injuries and damages for claims that just have not been settled yet and are still developing. Fortunately, there were no risk share paid claims, nor were there any risk shared reserves that were still open. This incurred but not reported, or IBNR, that is a actuarial requirement that we're required to put up reserve dollars for claims that have not been reported or submitted yet, losses that may have occurred, and we're more or less in a waiting pattern for those to come in. The state requires to add that as a possible expense. And when you look at the total expenses, a little over $1.2 million, comparing those to the 2.1 million in revenue for the years, that leaves us with a revenue situation where we are going to be able to pay refunds to our members. And you can see that ultimately ends up being $903,000. There is an entry there from an amount due from member. You know, each of our 33 members have their own individual claim histories during the year. We may have most of our members that do get a refund, but one that might have had a bad year where they had multiple claims that exceeded their SIR. Therefore, they would have more of that SIR to pay, which would add to their expenses. They may actually end up receiving a billing, and that's what that amount due from member shows there. And next slide, please. This is just a comment on the timing of the retrospective adjustments for the liability trust fund. Those are calculated at the end of every year. And we typically know by March 31st, which happens to be today, whether we're going to be in a refund, net refund position or a net billing position for all members. December 1st of the next year is the time that any retrospective billings would be due. And we also pay out the refunds about that time. It gives the member an opportunity to budget throughout the year for either that insurance refund of dollars or an insurance billing. Next slide, please. And we'll really look at the same here for the direct physical property damage side. And the November 30th date is our end of the year for DPD as well. Our retros are calculated at policy year end. The annual audit is completed by March 31st. These claims are typically done and over with by then. So we actually do issue refund checks at our annual meeting in May of each year. And that's really just another good selling point of a pool. You come to the annual meeting and you actually receive dollars back on your insurance deposits that you made. And typically the DPD side runs to the point where refunds are issued on a fairly regular basis. And again, the payment or billing, I should say, in this instance, allows a member to budget for that out throughout the year because the billings are not due until December 1st of the following year. And then finally, I just wanted to indicate that again, MTAP is a group self-insurance risk-sharing pool. We're not an insurance company. And that was always the mantra of my predecessor, Bob Nemi. Bob always said, every dollar you send to the pool is your dollar until it's needed for your share of administrative expenses, your direct claims, or your share of risk-shared claims. So again, the pooling offers you the opportunity to not only get your dollars back, but to play an active role in the management of your claims, both claim handling and risk management. And that's all I have.
Great. Thanks, Glenn. And thanks to all three of our panelists today. I learned a lot, and I've been researching this topic for a while. I hope you guys got a lot out of it as well. We're going to move on to the Q&A. I think it'd be easiest if I go through the people that wrote in on the chat first, and then we'll go to people that have raised their hands in the audience. So first up was one from Beth. And Beth was asking, how do you interview the risk? How do you interview the risk of pool members? How do you figure out how risky they are when you're trying to set something like this up? Brenda, do you have anything that you could share with Beth about screening members?
I guess there may be a few different ways, but I'm not sure if if I would have all of the answers on that, but just to screen and, you know, references, and I'm really strong on that. And in a small community, a lot of times people know each other. Your own team refers and so forth.
Yeah, I know that's definitely the case here in Kansas. You can't not know everybody else. Anybody else want to chime in on this topic?
I can, at least for our pool, we do a 5-year loss experience for both the workers' comp, and we look at various metrics. We've had people that have asked to be in the pool, and we've said you need to get your losses down for a number of years. And we also do a full and robust inspection of all of their policies, procedures, and hiring criteria, and score them to see what they need to achieve prior to getting in. So we look at, do a serious analysis of the loss history and what claims are outstanding.
I can add to that too, Mike. We have an application process for MTAP. And as part of the application process, we ask for 10 years of loss history. And so we'll ask the member if there's some losses that have some rather high payouts out there, and find out just what was involved to the best that we can. And that's really a part of our underwriting process as well.
Great. Thank you all. So Beth, it looks like you have many sources for information and some cheat sheets there. Next up, Walter has a question. As you know, the rural transit providers are currently exempt from FTA's requirement for formal and adopted safety plans, but can a pool, an insurance pool, require its members to develop and adopt a safety plan and follow FTA's guidance for those plans? So who has the last say on that?
Well, with MTIP, of course, we're going to encourage the FTA requirements. We have suggested guidelines, and we offer a safety policy manual for our members to access through our mtponline.org website. There's a lot of resource material out there, and they can go out and pull up various topics, and it's all suggested guidelines. We really only get into enforcement when we begin to see unsafe risk management practices. We've got an audit process of our 33 members. We try to get out to at least 1/3 of those members every year. So we're looking at 11. We're going through the risk management safety analysis process. And if there are issues with claims and losses, our risk management committee of our pool will get together and review those and offer some suggested steps to maybe take some corrective measures to minimize or avoid those losses.
Okay, next one is for Brenda. Thanks for you. The risk management plan can serve as a safety plan. Do you have guidelines that are that what should go into a risk management plan? For example, facility emergency considerations.
That's where I think using your resources to find out, and I think also what comes into play there would be the size of your operation and so forth. But as far as me having the guidelines, I just use the resources that are available to me, and understanding too that things change, keeping updated on it, and just inconsistency.
Anyone else want to add to Brenda's? Okay, we'll move on to the next question. I'm lumping a few together here. This is from both Pradeep and Robin. They had a little mini conference during the conference here. They'd like to know, what is the minimum number of transit agencies or the minimum budget dollar amount that makes insurance pooling feasible?
And I think from Michigan's perspective, when we started, it was just based on how many interested members we had at the time. Of course, we had to meet some financial requirements through the state of Michigan. and make a commitment to setting aside reserves early on in the development of the pool, and to make sure that those were ongoing and we're going to grow at a pace that would continue the capitalization of the pool. But I think it's really a multi-factored approach. You have to really decide how you want to operate your pool, what services you want to provide, and the expense of doing so. So I'm not sure that there's really a specific answer, like how many you need. Obviously, you need economies of scale to make sure you can meet all those expenses and make sure that you're growing your financial backup as you go along.
And I think the other consideration might be any insurance commission requirements. We have some minimum requirements in Pennsylvania for reserves. I know looking at some other states, they're the same way. So it might be what you need to achieve those reserves in a particular state. So that's going to drive it. And seeing the question about Washington State, it's going to depend on if you have a mechanism set up that you can cross state lines. The private sector does that a fair amount with very large motor coach pools, but sometimes government pools have some restrictions. So I would look at that too in your particular state. So it's really going to kind of ebb and flow based upon your state law.
Definitely. I've heard both scenarios where it's either run by the state or run by a nonprofit created to do the running or an agency separate altogether. So there are a few different paradigms that could work out. Robin, did you want to talk at all about the Oregon example in your statement?
Yeah, well, so in Washington State, they have both the transit insurance pool with TIP that does, they receive a lot of the RTAP funding in Washington State, and they use that for doing training. And I think, as Glenn and Jill talked about, the training is a part of reducing your risk, because it's a way of documenting the level of capacity in your workforce and the care that an agency has in maintaining a good safety record. If you're not training anybody, not caring about what people are doing, it's like pretty clear that, well, we just hope it goes well today. And that really isn't a great thing. But the pool, in a sense, is everyone sort of jumping off that together, and everyone in your transit program having a relationship to the value and the training that everyone else has. And I think in that sense, it's really nice. You're as safe as your neighbor is. You're as safe as your weakest link. But in Washington, they've had this insurance pool forever. And Oregon, of course, we looked over the fence and we're like, oh, we would like that. And, when we looked into it, I think the reserve amount was just way higher than Oregon rural agencies had at the time. But I think, that they've capitalized and there's a lot more growth in the area. And so potentially there's more of a chance for that. And one of the things about the pool that we didn't talk about is in Oregon, the special districts provide the sort of the framework for being a transit agency, but there's only one rural transit agency in the state, and that's the one in John Day, which is a town of 2,500. But when she was looking at doing a cross-border US DOT number service to get veterans to the Veterans Hospital, she went to insure her vehicle, and the private, she because FMCSA said you have to get insurance for that vehicle, and they said that's going to cost you $13,000 a year for that one vehicle, and was like, well, that can't work. And so she went to her insurance pool with the state, and they worked directly with FMCSA to get that covered. And as far as I know, it's the only instance of an insurance pool covering a state to state or an intercity service managed by a rural organization. And they accepted the pool, and they worked directly, FMCSA worked directly with the Oregon Attorney General. And so that is something that's out there for your pooling. So if you have a state where you are crossing state borders all the time and you're jockeying with the USDOT, FMCSA people, I think that there is a real opportunity to reduce your costs by working through a pool and having the pool behind you and your state insurance commissioner.
Great, thanks, Robin. We've got one from Michael Walk. Michael, I'd actually like you to unmute yourself and talk about this one a little. His question is, given states may vary with their regulations, and this ties into what Robin was just talking about, is there any issue with the pool having members that provide services that cross state lines? Now, I know from experience here in Kansas that there's issue with crossing state lines. It falls greatly onto whether or not your agency is a municipality-run agency or a nonprofit or private agency. But I was just hoping Michael could expand a little bit on his question.
Michael, you're muted. Oh, oh. Okay. You're muted now, Mike, Mr. Spadafore.
Sorry. I have emergency chimney repair going on today, so I've been muting and unmuting myself all afternoon. Yeah, he just said in the chat box that it's okay that we already answered his question.
Mike, I think I could share our experience on that one. Our Michigan self-insurance certificate prohibits our systems from having regular routes outside the state of Michigan. We had to do some research on this a few years back. We can do some limited medical transportation, door-to-door type service that has to cross state lines, but we are prohibited from any routes outside of the state. And we had a member that was right on the border that wanted to kind of enter into a regional transportation arrangement with a bordering state. And we looked into that and unfortunately got the word that that was prohibited based on the way that we were formed within our pool. So it just wasn't possible.
That seems to bring up the idea that if you're thinking about forming a pool, you really have to think about what your transit systems are doing and how the pool can support it. And I brought up the thing about FMCSA and the state-to-state travel because many rural states particularly Pennsylvania is one of the largest populations of rural communities in the country. It's really important to think about that transportation because you are looking at hub-to-hub connections and interstate access. So, Jill, please, what's going on in Pennsylvania?
So our pool, we did an analysis that the immunity in New York State, Maryland, New Jersey is very similar to the immunity in Pennsylvania. So we've allowed a lot of travel outside the state, especially for medical trips for the rural folks to really accommodate them. If there's regular routes inside and out, we allow them to get a rider, but stay in the pool. So we've really worked with those rural providers to make sure that the shared ride service is really cohesive and they can stay in the pool, even if they travel inside and outside for some of those limited trips. So we did a similar analysis. As long as they're a municipal entity, they stay in, but we've done a large focus on the rural folks. And our pool it does not include, and you're not eligible if you're in Philly or Pittsburgh because they're the big urbans. Everybody else shares our municipal government entities and our immunity level. So that's kind of the benchmark there, but we really try to accommodate those necessary trips to New York, Ohio, wherever the case might be.
Great. I think we're wrapping up on our time allotment here. So I just want to take a chance to thank everybody for participating, be you a panelist, a national advocate, a cheerleader, a driver, a rider, or whoever you are. And also to everyone that showed up. I was really happy to see that there were literal dozens of people logged in today. So I appreciate that a lot. Again, the questions that didn't get hit, or if they're leftover questions in the Q&A, they'll be answered after the session is over with the recordings and be published in about a week or so, Kara said. So thanks, everybody. Thanks for sticking around and have a good day.
Thank you. We loved it. You panelists were fantastic. And it held me spellbound. Insurance, it held me spellbound. Thanks.
Thank you, Rob.